You have seen the presentations, and we have some time for discussion. And before I give floor to the participants, I would have a few questions to clarify or to add to the presentations that we have just seen. And it's very clear that although the directive itself is now cast in stone, it provides a lot of member state options. And this means that the final impacts and the final implementation will really be depending on the member states' way of implementation. I would like maybe to ask Didier, we are now getting to a situation where we have on one side micro companies where member states can decide whether they apply this regime or not. Then we are having the small company regime, which provides the maximum disclosures that member states can require from their companies, with some small exceptions. And we have the mid-size and large companies, where member states can add additional requirements. And finally, we have the IFRS applicants, either on an obligatory basis, which is the consolidated statements for listed, or on a voluntary basis, as could be required by the member state or allowed. So how do you see, basically, I am a bit missing the logic why for the small companies and IFRS we are telling this is the maximum, and for everyone else we are letting the member states to decide. Could you comment on the ideas behind this?
I think, can you hear me?
Yeah.
You can hear me. I think the starting point is that as part of a global EU policy to simplify the life of the SMEs, so what we call small firms in the directive, but what are more largely qualified as SMEs, the idea is to really make sure that they are active in a legal environment which is as simple as possible, and that includes accounting. SMEs are the biggest source of growth and jobs in the EU, and it's recognized that one of the obstacles to the development is the imposition of too cumbersome legal requirements. So we were part of a much bigger picture here. And this is something which we will continue to work on in the next years, because the focus on the appropriateness of the legal framework for the small firms is going to be central to the new project which we're going to launch in the next month regarding the so-called Capital Market Union. So that is the rationale. Now, I heard many people today, but also previously, say that asking the question on whether we are actually simplifying the life of SMEs, in particular as regards their needs in terms of communication to their banks or to their different sources of financing. I think it's a very valid point, but one should not forget what we have been doing here. What we've been doing is limiting the possibilities for member states to impose compulsory legislation on SMEs. We've never prevented anyone from producing any kind of statement or giving any information to banks if this is needed. But what we were targeting is those, national legislation that very often, one has to recognize it, go far beyond what is actually needed, and also sometimes impose on companies things that they actually do not need to produce. So basically what we say is that there is a common set of rules for everyone. If you need to do more, you can, but that's your choice as a company. So I think that makes quite a lot of sense.
Yeah. Thank you. I think this was a very good point, and this is also how I read it. If you are a family company which is financed by their own equity and you are not that big, you can really stick with the lowest threshold, and it's then up to the companies to decide what information they need to provide to be able to efficiently operate in their marketplace. And this could be, if you ask for bank funding, you need to do more. if you want to issue, I don't know, bills of exchange, probably the counterparty will ask for more as well. But you are not required to do so unless you have a good reason to do it. And that's back to the key issue of relevance. Stig, you mentioned that we are still far behind a principle-based framework. I do see in the directive that there is a lot of these principles in the accounting directly enshrined. You have some options for member states to deviate from this situation. So, but from your point of view, to really get to a principle-based situation, where you mentioned this might be at the end of the century if things go right, would you think that it's more to insist on the existing principles or to remove some of the rules that we are currently seeing in the directive?
I think it is to go for the more, to have the general principles to be applicable to all participants, or not have the options to not require substance or form, not require this and that. So not have not to not to require or not to allow more prudence in some countries than in others, and have the general principles to be applicable in all cases. And also that some of the detailed specific measurement requirements and maybe also recognition requirements may not be needed if you have a more principle-based approach to accounting, and that could in certain respects go for notes as well, when the relevance and material requirement is maybe settled more in and utilized more general, in a more general form and more harmonized way in Europe. Mm-hmm. I think there is in order to add on the question before, I think the banks will usually be able to require additional information because they can ask the company to do so. But there are suppliers and creditors and customers where may be on the limit to ask the companies to actually if I want to deal with you, you have to provide additional financial statements information for me to be able to trust you, to give you credit, and to let you supply me or build a building or whatever. And that is where sometimes, it's a little bit difficult because it's all with the banks being put forward as mentioned. It's not all the other relationships that companies have. And I think in some respects, you can talk about administrative burdens, but there is also a burden to all the transactions in the economy that is based on trust, and where you get some of the trust by reading the financial statement and have a published financial statement where you can fully understand the position of the company.
Okay, thank you. I would like now to move to Italy. I would like first to clarify one thing that was not that clear for me. You mentioned that some of the small companies are prohibited from using IFRSs, yeah. And then also that the SMEs will think whether they should apply it or not. Could you clarify really where the limits are, yeah. And who has this choice and who doesn't?
Yeah, of course, thank you. Well, our civil code, the article 2435 bis of the civil code, of the Italian civil code, states that companies which do not go beyond 4,400,000 euros of assets, of total assets, and 8,800,000 euros of sales. And then I would tell you, because it's 2 limits out of 3.
So it's a small company threshold.
These are small,
one.
okay, yeah. And the average number of employees during the year cannot go beyond 50 units. These subjects may use a simplified, this is the 4th directive basically, may use a simplified form of financial statements, and this is not Italian only, it comes from the 4th directive. This category of firms cannot and will not be allowed to use the IFRS anyway, okay? So that's the only prohibition, let's say, which still survives.
So the option is available for the mid-sized companies, basically.
Let's call them so, yeah.
Okay.
Yeah, that's correct.
And you mentioned now that you have basically two regimes for the individual financial statements, either Italian rules or IFRSs, and
true.
that you were struggling with the tax issue. How was the tax issue here solved? Does it mean that you have additional tax rules to align the tax duties of these two groups?
Yes, that's correct. I mean, let me go to your first question and clarify this. Well, when I say that there are some Italian companies which are allowed, some are obliged, as I said, and some others are allowed to prepare their individual and separate accounts according to IFRS, that means that they will prepare the accounts from which the taxable income is calculated according to two completely different sets of standards. So the tax issues come from that, because even today there can be some imbalances. If the taxation rules had not changed, but they did change to accommodate these two, let's say, accounting regimes, if they had not changed, we could have had disparities, let's say, between the calculation of income, taxable income from the part of some subjects and their immediate competitors, non-listed, for instance. Okay, so that was the problem, an imbalance in taxation charges. But the tax system was adapted. So there are some articles in our tax code, tax legislation, which were added in order to make this fair, let's say, as fair as possible, even if it will never be exactly the same thing.
Yeah. Okay.
So this problem has been solved already. Mm-hmm.
Okay. Florin, you mentioned also that your tax system is quite dependent on the accounting. So how do you deal with the issue when companies might have choice to go to IFRS, or some are even forced to go to IFRS, and they are facing the same tax rules that are drafted based on the Romanian standards?
Yeah. The idea is that basically I would just correct just a little bit on this issue. It's true that the tax authority likes the accounting to be directly linked to the tax rules. Concerning the IFRSs, we are, let's say, on the right track, because banks now, they do have, they apply IFRS and they have the same basis for the taxation, which is the IFRS accounts. But the rest of the companies, listed companies, for instance, what they do, they have basically two reporting set of financial statements, which is one is IFRS, which is for information purposes only, and one is based on the national, EU directives adopted national legislation, and this one is the basis, the basics for the taxation. The problem is that many companies, and I believe that it's not only a Romanian thing, but at companies level, they are really also going towards the taxation rules when it comes first, especially for prudence. And at small undertakings level, without any assurance at all, which was, let's say, a pressure point for them to apply prudence, to apply substance over form, to go where the true and fair value is, they might miss this and they go eventually towards the tax rules close reporting, which is sometimes it's far away from the reality.
Okay. Yeah. Okay. I would like now to invite whether we do have some questions from the participants. Yeah, Jens, I see. Do we have the mics? Okay, thank you.
Thank you. Can you hear me? Right. Thank you very much for a very interesting presentation from all the panelists. I do have basically two questions. I'm Jens Roeder from the Nordic Federation of Accountants. One to the panelists generally, but also one specifically to the Commission. First of all, do the panelists, particularly those of you who are auditors amongst you, believe that it's possible to provide an audit opinion as in accordance with the auditing directive that has just been passed on the very small entities with the very limited financial information that's required. This is in the context, particularly in the Nordic region, where we still have an audit requirement for small entities. The other question is to the Commission, and that is, why didn't you go the whole way and just remove the requirement for publicized financial information for the very small entities? Because it would have made it easier for us, actually, because we wouldn't have to audit or provide an audit opinion maybe on some very small entities, which is very difficult to do. Thank you very much.
Yeah, maybe. I think the first question was directed to auditors on the audit situation. Is there who would like to cover that? I could deal with it, because I'm pretty sure that for the micro companies, there's no way if they produce the minimum required information, there is no way we could state as auditors that the financial statements give a true and fair view, of course. What we could do is to say that these financial statements were properly prepared according to the rules that are in the directive or in the national law based on the directive. That's something we could do as the audit profession. For the small companies, where it's bigger, I think this remains to be debated, and I think we will have this debate probably at the member state level as well, to see whether we could say it's true and fair, or whether we would need to resort also to the properly prepared clause only. Or the other option could be we could ask the companies, if you want true and fair view, you need to add probably a few disclosures to really provide all the information that we as auditors do consider relevant for the state of your affairs. Of course, provided that the member state asks for the audit of the small company accounts, which is a member state option.
I think just to clarify, I don't think there is a requirement at the directive level to have small companies audited. I think it's not.
No.
You're not allowed. You are allowed to require it, but you're not. It's not mandatory to require it.
Yeah, exactly. So we have a provision saying that for medium size and above, there is a requirement. Below, it's a member state choice. But the law according to which the audit has been, the law regulating the way the accounts have to be prepared for a small firm is now harmonized by the directive. So this is the benchmark for auditors. So I don't really understand the question there, because I mean, you have to make sure that the law is applied. I mean, so if you simplify the law, the job should also be simplified. Unless you disagree with that statement, but I'm happy to discuss that.
Okay? Okay?
Sorry.
Yeah.
Do you want me to respond very quickly? Okay.
Yeah.
It's the difference between the law as it stands at the moment. We will be getting very simplified requirements in the directive for the provision of publicized financial information, and for good reasons. But at the same time, we have an auditing directive, and I completely agree it's possible for member states to up the limit for the audit and thus make everything fit. But at the moment, that doesn't seem to be happening everywhere. So we may have this difference, and basically, that's my point here. There is a mismatch, and that mismatch may continue.
Mm-hmm. Yeah. We have a question from Sandrine.
Hello, can you hear? Hello?
Yeah.
Ça va? Okay. I'm Sandrine van Bellingen, Delegate General International and European Affairs from the Belgian Institute of Registered Auditors. I had two questions. One for Mr. Millero. I was wondering whether you could give us more details about the member states which brought the case before the Court of Justice. Which member state is it and for what reasons? And the second question is basically addressed to both Mr. Thomas and the Italian representative. Sorry, I don't remember your name. I was wondering when Italy and Romania were expected to implement the accounting directive, and also about the thresholds. What evolution will it, how will it evolve? What option will they take? And whether there will be a difference between audit thresholds and accounting thresholds? Thank you.
Yeah, I would like to ask the panelists for brief answers because we are running out of time. But yeah, Didier.
So that country, Madame, is Estonia, and they challenged basically the provisions, the full harmonization clause of the directive for small firms. They considered that it was not properly justified to restrict the possibility for member states to go beyond. And what they have in mind is obviously their system of a one-stop shop whereby companies are able electronically to provide financial statements, but also other information to their authorities via a single channel, which I believe is endangered by the directive. It is not our position, but that's basically one of the reasons why they go to the court, and we expect a ruling maybe next year.
Okay, thank you. Okay,
Yeah.
Claudia?
Yes, I will try to answer your question as far as Italy concerned. Well, more likely, I mean, the debate is going on in these months, in these weeks. So I don't have a specific answer to the thresholds and stuff like that. But what I can tell you is what we sense about that. I am positive about the fact that the Italian legislator will not go much far from what the accounting convention, the existing accounting convention is today, especially as far as the historical cost convention is concerned, which takes together the prudence principle over the matching principle anyway. Okay, so this is for sure, very likely, let's say. Okay, and as far as the audit, so the possible misalignment between audit and accounting requirements in this country already now, before the implementation of this new directive, there is a simplification trend in terms of smaller companies which do not need to be audited. And again, I pose a question. My answer is another question to the floor too. Do we really think that audit is just a cost, or it may have an educational role in the sense that it may contribute to the true and fair view also in smaller companies, in their limits?
In Romania, we have the draft legislation. There is a draft legislation proposed for public consultation. Apparently, we're going towards the limits which were recommended by the directive. The audit will remain with PIEs and probably, most probably, with medium and up, not for small.
Okay. Okay. Thank you. Ladies and gentlemen, the time is passing by, so we are getting to the close. It's very clear from the discussion that we will see much more differentiation in Europe between the requirements that are now focusing on the small companies and on the big end. But I think the crucial issue for us is that the companies do provide relevant information. And I would tend to say, my personal view, only relevant information. And it is really up to the legislators to find a way how to get there. And it's pretty clear that for the listed companies, the volume of relevant information is significantly bigger than for the small and micros. And this is really what we would like to achieve and where we would like to get. And if we achieve that, we could probably get rid of the 500 pages financial statements, which is difficult to grasp even for the analysts, and have really something that makes sense for the large, for the mid-size, for the small, and for the micros. So I would like to thank you for your attention and wish you a good day and last day of the Congress. Thank you.